Assalamualaikum and hi everyone. Thank you for being here. Today, I will be presenting the introduction to our FIN549 derivative trading simulation. Commodities are financial instruments whose value is derived from underlying assets such as stock indices, commodities, and precious metals. Unlike the stock market, traders do not own the actual asset. Instead, they trade futures contracts based on expected movement of price. These instruments are widely used for speculation, hedging against risk, and portfolio diversification, making them an important part of today's financial market. For this project, our group participated in the InvestLab trading simulation, which provides us with practical experience in trading derivatives using virtual capital. The purpose of this simulation was to help us apply the theories learned in the class to real market situations without facing actual financial risks. Throughout the simulation, we analyze market conditions, develop trading strategies, execute trades, and evaluate our overall performance. Our team traded 3 futures contracts, namely FTSE Bursa Malaysia Kuala Lumpur Composite Index Future or FKLI, crude palm oil future or FCPO, and gold future or FGLD. Before making any trading decision, we combine both fundamental and technical analysis. We use indicators such as moving average, RSI, MACD, and support and resistance, while also considering economic news and market conditions. In this presentation, we will explain our trading activities, strategies, performance, and the valuable lesson we gained throughout this simulation. Next, I will pass to the next presenter.
So now I will explain the role of group members. First, I will explain the role of our group leader, which is NURUL IRWANA. She managed the overall trading simulation and made sure every task was complete according to the project timeline. She divided the work among the group members, monitor our progress, organize group discussion, and ensure our trading activities and the report were complete smoothly. Next is NURUL BALQIS. She was responsible for analyzing the support and resistance level together with the overall price movement. She also identified whether the market trend was likely to continue or reverse before giving recommendation on when to enter or exit a trade. Next, NURSHAKILA SHASHA focused on technical analysis using the MACD and stochastic indicator. She analyzed the market trend and momentum to identify suitable entry and exit point and also helping the group make better trading decisions. Moving on to Alia NATASHA, she conducted fundamental analysis by monitoring macroeconomic event, market development, and economic report that could affect the FCPO and FKLI market. She then shared her findings with the group to support our trading decision. Next, SUHAILA research industry report, expert opinion, and other market information related to the futures market. The information was discussed within the group and used to improve our trading strategy. Lastly, FARHANA monitor important economic news and market development throughout the trading simulation. She analyzed the latest information to ensure our trading decision reflect the current market conditions.
Hello everyone, now I will explain the use of derivative in our trading simulation. First is FCPO, or we call it crude palm oil futures. FCPO is a futures contract that allows traders to buy or sell crude palm oil at a fixed price in the future. It is mainly used for hedging and speculating. Producers use FCPO to reduce the risk of falling palm oil price, while traders use it to profit from price movement. The price of FCPO is affected by global supply and demand, weather conditions, crude oil price, and exchange rate. Although FCPO offers profit opportunities, it also carries high risk because future trading involves leverage. Next is FKLI, or we call it FTSE Bursa Malaysia KLCI futures. FKLI is based on the performance of the top 30 companies listed on Bursa Malaysia. It allows investors to trade the overall stock market without buying individual shares. FKLI is commonly used for hedging, speculating, and portfolio management. Its performance is influenced by economic conditions, interest rate, inflation, investor confidence, and global market trends. Like other futures contracts, FKLI allows margin trading, which can increase both potential returns and potential losses. The last derivative is FGLD, or we call it gold futures. FGLD allows investors to trade gold price without owning physical gold. It is mainly used to protect against inflation and economic uncertainty, as well as for speculation. Gold prices are influenced by global gold price, interest rate, inflation, and geopolitical events. Since gold is considered a safe haven asset, its demand usually increases during uncertain economic conditions.
Now, I will continue with the fundamental analysis used in our trading simulation. Fundamental analysis is a method used to study economic news and market events that can affect the price of a derivative product. It helps traders understand the market before making a trading decision. For our trading simulation, we refer to two Reuters articles to analyze the factors that could influence the price of FCPO or crude palm oil futures. The first factor is weather condition. According to the first Reuters article, Malaysia experienced heavy rainfall and flooding in several palm oil producing areas. This weather condition disrupted harvesting and transportation activity, which reduced palm oil production. The Malaysian Palm Oil Board, or MPOB, also estimated that production could continue to decline if the heavy rain persisted. When production decreases, the supply of crude palm oil in the market becomes lower. If demand remains stable, lower supply usually causes prices to increase. Based on this information, our group expected the FCPO market to become bullish. Therefore, we decided to take a buy or long position because we believe that price would continue to rise. The second factor is export demand. According to the second Reuters article, Malaysia expected its palm oil export to China to remain resilient despite price pressure. China is one of Malaysia's largest importers of palm oil, so strong export demand shows that demand for Malaysian palm oil is still healthy. When export demand remains strong while supply is limited, it creates positive support for FCPO prices. This gives our group more confidence that the market will continue to move upward. Therefore, we maintain our long position, expecting to benefit from the increase in price. Overall, these two articles help us understand the market situation before making our trading decision. Instead of relying on guesses, we use real market information to support our analysis. By combining the impact of lower production due to heavy rainfall and strong export demand from China, we concluded that the market outlook was positive. This fundamental analysis helped us make a more confident and informed trading decision during the trading simulation. That's all for my part. Now, I will pass the presentation to the next presenter.
For my part, I will explain the technical analysis used for the FKLI futures contract. For this analysis, I selected two method indicators, which are the trend line and the moving average convergence divergence of MACD. First, the trend line acts as the primary filter. It helps identify the overall market direction and establish the market boundaries. Before entering any trade, I first determine whether the market is an uptrend or a downtrend. I only take trading positions that follow the primary trend because trading with the trend generally provides a higher probability of success and helps reduce trading risk. Next is the MACD, which acts as the trade execution trigger. Once the market trend has been confirmed using the trend line, I wait for a MACD crossover signal before entering a trade. A bullish crossover where the MACD line crosses above the signal line indicates a long or buy position. Meanwhile, a bearish crossover where the MACD line across below the signal line indicates a short or sell position. By combining the trend line with the MACD, Tradingsimulation become more reliable because both the market strength and momentum are considered before entering a position. Using technical indicators, market conditions also play an important role in determining the accuracy of technical analysis. The first factor is market volatility. During periods of high volatility, prices can move very quickly and create what is known as market noise. As a result, traders may receive false MACD signals or temporary breakouts because by unexpected news rather than actual changes in the market trend. To reduce the risk, I wait for the price to consistently respect the trend line instead of reacting to a single price movement. The second factor is market liquidity and trading volume. High trading volume indicates strong market participation, making technical signals more reliable. However, when trading volume is low, breakouts may lack conviction and quickly reverse, which is commonly known as a dead cat bounce. Therefore, I use volume conviction together with the MACD signal before validating any trade entry. In conclusion, combining the trend line as the primary trend filter, MACD as the execution trigger, and considering market volatility and liquidity helps produce more disciplined and objective trading decisions while reducing the risk of false trading signals.
So now I will explain the overall trading performance of each group member. First, NURSHAKILA achieved the best performance among all group members. She completed 36 trades and earned a total profit of 12,840 ringgit. She also recorded 12.84% return maximization and 12.89% ROI, showing that her trading strategy and risk management were very effective throughout the simulation. Next is BALQIS. She made the highest number of trades with 49 trades. However, she still recorded a loss of 9,424 ringgit, resulting in negative 9.42% return maximization and negative 3.75% ROI. This shows that making more trades does not always lead to better performance because the losses were greater than the profit. Next, SUHAILA completed 37 trades and recorded a loss of 70,230 ringgit. Her return maximization was negative 70.21% and ROI was negative 60.34%, although she was active throughout the trading simulation. So the overall losses exceeded the gain. Moving on to NURSHAKILA SHASHA, she completed 42 trades but recorded a loss of 24,083 ringgit and 40 cents. As a result, her return maximization was negative 24.08% and ROI was negative 22.58%. This highlights the importance of managing losses effectively during trading. For FARHANA, she made the lowest number of trades with only 70 trades. She recorded a loss of 25,295 ringgit with negative 25.30% return maximization and negative 25.18% ROI. Having fewer trades also reduced the opportunity to recover from previous losses. Lastly, Alia completed 36 trades but recorded the largest loss of 62,993 ringgit. Her return maximization was negative 22.99% and ROI was negative 36 ringgit 0.98%. This shows that active trading alone is not enough if losses are not properly controlled.
Now, I will briefly explain the strengths of our trading simulation. Throughout the simulation, we successfully applied both long and short trading strategies based on market conditions. We also use technical analysis to identify good entry and exit points before making trading decisions. In addition, we maintain trading discipline by following our strategy consistently instead of making emotional decisions. Trading different derivatives such as FCPO, FKLI, and FGLD also improve our understanding of market behavior, technical analysis, and risk management. Overall, this trading simulation gives us valuable practical experience and help us build greater confidence in future trading.
Present the weaknesses of our trading and our recommendation for future improvement. After our group applied both technical and fundamental analysis throughout the trading simulation, there were still several areas that could be improved. The first weakness was inconsistent trading performance among the group members. Out of 6 traders, only 1 achieved an overall profit, while the remaining members recorded losses of different amounts. Even though everyone used similar trading strategies and analytical methods, the results were very different. This shows that having a trading strategy alone is not enough. Successful trading also depends on making the right decisions, executing trades at the right time, and adapting to changing market conditions. The second weakness was inadequate risk management. In several situations, some positions were kept open even when the market moved against the expected trend. In addition, stop-loss orders were not always used effectively, causing losses to become larger than necessary. Since derivative products such as FCPO, FKLI, and FGLD are highly volatile, traders must be disciplined in managing risk to protect their trading capital. The third weakness was inconsistent trading activity. Although most members completed the required minimum number of trades, one member only executed 17 trades. As a result, there were fewer opportunities to benefit from market price movement and less exposure to different market situations. This reduced the overall trading performance and limited learning experience during the simulation. The final weakness was limited use of combined analysis. Some trading decisions relied mainly on technical indicators or short-term market movement without sufficiently confirming them through fundamental analysis. Because of this, several trades were entered during uncertain market conditions, increasing the possibility of trading based on weak signal and resulting in lower trading success. Next, I would like to present our recommendation for improving future trading performance. The first recommendation is to strengthen risk management practice. Before entering any trade, traders should always set a stop loss and take profit level. This helps to control potential losses, protect trading capital, and secure profit when the market moves in the expected direction. Secondly, traders should combine technical and fundamental analysis before making any trading decision. Technical indicators such as MACD, RSI, moving average, and support and resistance should be supported by economic news, market reports, and global development. Using both types of analysis provides a more complete understanding of market conditions and leads to better trading decisions. The next recommendation is to maintain trading discipline. Every group member should complete the required number of trades while consistently following the trading plan. More trading experience allows traders to gain a better understanding of market behavior, improve their decision-making skill, and recognize more trading opportunities. Finally, the group should regularly review and discuss complete trades. By analyzing both successful and unsuccessful trades together, members can identify mistakes, share useful insight, improve teamwork, and build greater confidence when trading derivative products in future simulations. In conclusion, by improving risk management, combining technical and fundamental analysis, maintaining trading discipline, and learning from previous trading experience, our group will be better prepared to achieve more consistent and profitability trading performance in future simulation. Thank you.
To conclude, the FIN549 derivative trading simulation was a valuable learning experience that allowed our group to connect classroom knowledge with a real market practice. Throughout the simulation, we gained a better understanding of how derivatives operate by trading FKLI, FCPO, and FGLD futures contract. We also learned that successful trading depends on not only on making profits, but also on applying proper analysis, maintaining discipline, and managing risk effectively. Although some of our traders resulted in profit, while others recorded losses, every trade provides valuable lessons that help improve our analytical skills and decision-making abilities. By combining fundamental analysis with technical indicators such as MACD, RSI, moving average, and support and resistance, we were able to make more informed trading decisions and better understand market behavior. Finally, this project also strengthened our teamwork, communication, and problem-solving skills as each member contributed to the success of the assignment. Overall, the trading simulation has increased our confidence in understanding derivative markets and provide us with practical knowledge that will be used in our future studies and investment decisions. So that's all from us. Thank you for your attention.